Good afternoon, everyone. Welcome to this TradeStation webinar. Thank you for taking time and joining us today to learn a little bit about futures options. Our guest speaker today is Brandon Wendell. If you've been to one of our options replay, you already know his presentation style and you know that he is going to have some good insights for us. This particular session, though, is going to be based on futures options. We have one that is based on equity options that is a little bit more recurring than this one. So what I recommend is for you to check out the events calendar to see which one's happening. Today is the case of futures options. So we're going to be using FuturesPlus to show some examples on the TradeStation platform. That's the platform we're going to use today. If you have any questions about how to get it, how to set it up, how to open up a futures account to trade options on futures, just let me know right there in the chat and I'll be glad to answer those questions. I know that Brandon is also very knowledgeable about the process and he can provide some answers as well. But Brandon is a trader and he's a mentor. We're glad to have him here today. He's not affiliated with TradeStation, although we love to have him here and teach us a little bit about his trading style and what these products are. For those that don't know me, my name is Jesus Nava. I'm the Director of Client Training for Education and at TradeStation Securities. Please feel free to reach out to me here via the chat if you have any questions about our education pieces. Disclosure-wise, just keep in mind that every symbol and idea that we talk about is all examples and they're not recommendations of TradeStation. There are risks when you trade online, and I want everybody that needs a little bit more information about these risks, just go to tradestation.com/important-information. All right, everyone. I'm glad to see everyone here. I'm going to pass the microphone over to Brandon. Brandon, the floor is all yours. Let me go ahead and stop my share so you can start yours.
Hi, everyone. Thank you for being here. I'll go ahead and share my desktop with you guys. Let's see, screen one, and should be looking at my FuturesPlus right now. Hopefully. Yeah, it looks like it. We're good. All right, great. Let me go ahead and get the chat back up so I can make sure I can keep an eye on that and answer any questions that may come up. As Jesus mentioned, I know a bit about the program and about a lot about trading, and whatever I don't know, I'll make up and you won't know the difference. No, I'm kidding. I won't make up the answer. I'll actually find out the answer for you or refer you to the right source for that. As Jesus mentioned, I don't actually work for TradeStation. I'm just asked to come in and talk about some of these things. And we actually did a couple trade. We did one particular trade last time we were together, and that was an iron condor on crude oil. And you can see that actually, let me see. I want to make sure I'm running Zoom it while I'm thinking about it. And let's see. Hold on. Zoom it, me open. And this, okay, Control-Shift-1. Cool. There we go. I want to make sure you guys can see the numbers because obviously sometimes it's hard to see the program, and I have this run this Zoom it to be able to see it a little bit better. But anyway, this is there's a couple trades I'm going to go over. One is the one we did last time we were together, and this was on crude oil. And you'll notice the symbol is not CL, it's LO. So if you're not familiar with the symbols for trading futures options, it's not that hard to find them, honestly. You can actually go out to the CME website, and let's see, CME group, been there quite a bit. Oh, come on, CME group. And there's a contract directory tool. So if you go to the search feature, I already been searching for it before. I'll zoom in again. There we go. You just type in contract directory under that little microscope for search, and it'll be contract directory and calendar tool that you'll find. And basically, you can find whatever it is you want to trade when it comes to the options on futures based on the underlying future themselves. So let me zoom in a little more again. This browser. So we were looking at crude oil. I'll go to energy, and there we go. Crude oil. CL would be the futures contract, and LO would be the option contract. Nat gas would be L. Okay. A brief introduction to futures options and how they differ. Actually, that's already available for you in a lot more detail than I get into right now. If you go to tradestation.com, there is a section right here under Learn called Futures Education. And in Futures Education, although I will answer some of that question today, in Futures Education, if you scroll down a little bit here, you'll see Futures Trading Essentials. Right here, first of all, here's where the videos are going to be for Futures Options Replayed, this one included. Once it gets screened and cleaned up a little bit, it'll be posted there for you guys to rewatch as much as you want. But right here, you've got FuturesPlus Masterclass, which Jesus and I hosted, Jesus hosted, I participated in. And right here, I did sections on future spreads, but also options on futures, key concepts. So right there, you can watch the webinar and learn all those questions. These 3 webinars, key concepts, versatility of futures and options, and risk management, especially talking about the risks and reward and things like that, it's all right in there. And this one was already completed. We actually have these 2 coming up, so you can register for those webinars. But yeah, if you want to know more of the basics, futures options are just options on futures rather than options on stocks. So the deliverable might be the underlying futures contract rather than 100 shares of stock. So if I were to go to crude oil, as I said, you'll notice LO is not the only symbol. Okay, we have different types of options. We have the LO, which is, as you can see, the weekly options, LO1, LO2, LO3, LO4 would be week 1, 2, 3, and 4. M, the lettering is the same monthly lettering as you use in futures. M would be June. Okay, N, July. So you have LON, LO2, N5, right? So yeah, the futures options get a little more complex, but here's where it's simple. This tool that I just directed you to under CME, again, it's the contract directory and calendar tool. Check it out. You click on one of those weekly options. And by the way, you'll see there's WL, NL, ML, Monday, Tuesday, Wednesday, X for Thursday, and then LO for Fridays, weeklies. So each one has a letter, M for Monday, N for Tuesday, W for Wednesday. I know the N doesn't make sense, but they use N and X, so you don't have to worry about T for Tuesday or Thursday. Which one is it? Anyway, if I click on it, it shows expiration for the option. Oops, sorry, I didn't mean to go there. Or come on, get out of there. There we go. Scroll that back down. Yeah, I'll scroll this up since that popped in. There we go. Option expiration. 2:30 p.m. on the 12th. Future expiration, June 20th at 2:30. So there you can see the difference, which is pretty cool. Additionally, they keep it pretty simple in FuturesPlus. If I go over to my option chain for crude oil, which I think I have open right now. Nope, I was looking at Nasdaq, sorry. But right here, this is FuturesPlus, which is a web-based platform. I go over to my LO tab, which I'd opened up. It takes a few moments to load. It's a little switch. You can switch the mice. So right here, you can see it says June, and it's on the June contract. July contract, August contract. The first one is this is the option. This is the futures contract that it's based on. So it's no big deal here because obviously July is based on July, August is based on August. That's easy. Where it gets confusing sometimes is you go to corn and you can see the August contract for corn options are based on September futures. September options are based on September futures. June and July, actually, no, I'm sorry, those are both July. It's interesting. But yeah, sometimes they are based on the same contract. Sometimes they're based on different contracts, but that's all shown right there in the option chain. So I'm loading up, I think this is gold, OG. Again, if you don't know what it is, if I go back to choose a different product, let's see, we'll go to metals. And right there, gold, OG. I was right. Silver, SO. And again, if I want to know expirations and months, things like that. Now, their symbols are a little bit different here because they put the daily letter inside. So you see it's G1MM5. That is gold, first week, Monday, June 2025. I know it gets a little confusing and so on. Again, OG is Fridays. So if I click on the symbol, it's right on future. There's the futures contract that it's based on. It's based on the August contract, but the option expires in June. Why? Because it's OG, which is gold, third weekly option, June 2025. That's the expiration. Not for the underlying future, it's the expiration for the option. The underlying future, again, by clicking on it in this tool, you click on future and you can see what it's based on. Or, oops, back on this, again, we had the June options. Now, this is not showing me the weeklies. This is only showing me the monthlies that I have in here right now. But you could see that this June contract is based on the June. The July contract is based on the August future. August is based on the August future. September options are based on the October future. So it shows you what you're looking at right there. And I can change calendars and look at different months. I can add in more or less, whatever I want to see. And let's see, zip all out, and there they are. And again, most of these underlying futures have two contracts attached to them. So August 2026 has July and August futures or options. But again, there are more that you can trade. It's just I don't have the chain for them right now. I'd have to load it up individually, and you can do that. So right here, again, you see all that information, what you are trading, how it trades, both for the future and the actual option. Now, a couple other things that are important is right here. What kind of exercise is it? American style, which means it can be exercised at any time. That gives you greater risk if you are doing a short position, right? When you sell an option, if you are short, you have the risk of assignment on American style at any time. Even if it's out of the money, it can happen. And it has happened to me, unfortunately. Now, how do you know how much the margin is going to be for this? That's also something that's relatively simple. There's a tool as well on the CME group. You have to actually log in right here. And I'm already logged in. So you go to Customer Center. It's a free login, by the way. Once I log in, I go to Portfolio and Risk, Core Margin Calculator. And there's a margin calculator built into the website. Again, I got to go to Margin Calculator, Futures and Options. And let's see, I am currently in a position that we built. Oops, wrong spot. Directed how to fix this issue on the login to FuturesPlus. Contact FuturesPlus. I'm not sure why that we get that notice. I'm not sure. Contact the trading desk, maybe find out what's going on there. But where was I here? Oh yeah. So we were looking at a position that we had created together when we were in this session last, and that is an iron condor right here on crude oil. And what I did is I created a little spreadsheet while I was waiting to get started here today. And you can see here's my spreadsheet, CL iron condor. And let's make it a little bit bigger for the ocularly challenged. I don't know if you can't see very well. So what we did was I was expecting crude oil to stay between $55.50 and $65. So a little under a $10 range, $9.50 range. So we shorted the 65 call and the 55.50 put. And then to cover those, so we're not naked on a strangle, that would have been a strangle. Strangle is when you have two different option strikes. For the short, the risk profile for the long looks like this. Short looks like that. So you're strangling price. Straddle is just a V. That's where you have the same strikes. By the way, strategies, if you're not familiar with all the strategies, not only does TradeStation have great education on futures options, but there's also just an options education center. If you click on that, you can learn the individual strategies, and they also apply very similarly. Right here, you can see if I go through, we've got condors and butterflies and iron condors and iron butterflies. So there's an article, there's a webinar, there's data, a lot of good stuff, a little video that teaches you all about that strategy and how they can be employed. And again, they can be applied to options on futures just as easily. So what I was saying is that we created this iron condor, which we basically strangled with the 65 and 55.50, and then bought the 7,000 call to cover the 6,500 short call, bought the 5,000 put to cover the naked 55.50 put. So our risk is actually, this is a broken wing condor or iron condor. It's an iron versus a regular condor because we're using both calls and puts. If you use all calls or all puts, that would make it just a condor. But because we're using calls on one side, puts on the other, it makes it iron. That's the only difference. And basically, I'm selling options where I believe prices will not go before expiration. Okay, and these were July 25, so monthly by the end of July, still have some time left. And the other neat thing is when you're doing analysis, you can actually do analysis on the FuturesPlus platform or on the platform itself, the desktop for TradeStation. That's neat. If I were to go back to the TradeStation platform, Option Station, first of all, charting. Obviously, we can chart the futures here. We were looking at CL. Which one was this on? Again, we were trading the July contract, which I believe are based on the August. Maybe not. Maybe it's July. How do we know? Again, we check contract directory tool, energy, crude oil, and I was doing the July. So I go to July. There we are. And it was which option does it show? Nope, I keep going to the wrong page. My apologies there. I got too many things open. So it's the weekly, third week of July, I believe. It's the only one they show here. Again, if I go to the chain, this is GC now that I went to, or OG. Back over to the L. I don't think it actually shows a symbol here, but it was this one right here. 40 days left till expiration. June 16th is the expiration day. Okay. But no, it's not the one I was thinking of. It's June 16th, which is coming up. June 16th. There it is. LON5. So it's the July option on the July contract, I believe. So that's what I have to check. I look to see right here. It shows me, whoops, shift one, July 25, 40 days. And there's the expiration date that I can put into the calendar to know exactly which one it is I'm trading. If I were to go to the next month's contract, come on, get out of there. There we are. Anyway, from July, I don't need all. Let's drop that. There we go. So we go to August. You can see the August contract they're showing me is July 17th expiration. So when I go to the contract directory, if I'm looking for that one, I would go to July 17th. There it is, LOQ 25. Now, when you look at LOQ 25, the option expires in July. The future that's based on is the August, also expires in July, but a different day, the 22nd. And when you go to the option, it's American style and it is deliverable, which means you got to be careful because deliverable in this case is not the same as the futures contract. When you have deliverability on a futures contract, you would get delivered 1,000 barrels of crude oil, which really you don't want, unless you really might. I don't know. But most of us don't want that. By the way, in TradeStation, if you go to the TradeStation website and look under futures, there's a contract that you sign that says you will not take delivery. If you let your options go to the end or futures contracts go to expiration, before the expiration, you will actually be forced to close or liquidate your position, or the TradeStation will do it for you. And it's also in the message center too. So right here, if I go to view messages and the message center on TradeStation, there it is. Don't ignore those. Attention futures clients. They come out on a regular basis and it says right here, NYMEX crude oil delivered last trade day. Make sure you roll or close before a certain date. Failure to roll or close, the futures contract will be liquidated by the trade desk and you will only be allowed to close positions, not open new ones. So make sure you don't hold on too long. Now, futures, that's one. Options are a little different. When we look at options, it says deliverable. What that means is if you hold this into expiration and you are in the money on that option, you will get an underlying futures position. Remember, you're trading a contract on a contract. So instead of getting delivery of shares of stock like you would in a stock option, you get delivered a futures contract, one contract for one option. So if you're short an option, you might end up with a short position in the futures. If you're long the option, you get a long position. Not all are deliverable. If I go back, for instance, nat gas, and choose one of those, and even in the month, there might be different ones. Some are cash settled, financially settled in European style. So European style, that means that it is not exercisable until the expiration. Can't get assigned early. It's also cash settled, loser pays the winner. So there are no contracts that get delivered if you end up holding this until expiration. It's a big difference. And you just got to know what it is you're trading. That's all. Now, I mentioned I was in an iron condor, and if you want to know what the margin is, again, I go to the customer center I showed you, and in the customer center right here, when you log in, you can go to portfolio and risk, margin calculator. So let's create a new one, and I'll go to enter. And again, this will all be in those videos, the master class that I showed you that you can watch. It'll all be detailed in that too, that one on margins and whatnot. So let's say we're doing iron condor crude, or maybe I'll put that first. Crude iron condor. For whatever reason, you just have to put a number here. Doesn't matter what number it is. I just put 2 in both firm ID and account ID. You can't leave it blank. Product type, we're doing futures and options. Now, I do in crude oil, I can either type in crude and find crude oil futures, E-mini crude oil futures. No, it's just, I think it's crude oil futures NYMEX. Yeah, CL. Or I could have typed in the CL contract. Now, I'm not doing futures. This would be the margin for a futures contract. I do a lot of futures spreads. That's where I would look for the margins there. Instead, we're doing options. Now we go to options. And again, I type in crude oil options. And look at that. It does LO. Which options am I doing? Again, remember, I created that position. Where's my Excel spreadsheet? I just passed it. We have the July contracts, 7,000 and 6,500 calls, 5,550 and 5,000 for the puts. So I put those in July 2025. Notice it shows not the weekly ones, it showed those monthly ones in there. So I did let's see, we'll do the puts first. We'll work our way up in price. Underlying period code would automatically put that in for me. So I could see I'm trading July contracts on the July underlying. Strike price. Let's see, should be 7,000. Let's say show it differently. Might be 70, actually. Yeah, shows as 70. Net position on the 70, I did a short. Oh, I'm sorry. That one was a long. So I just do +1. I want to add in another leg. I was going to work my way up. I guess I'm working my way down. That was actually a call. Sorry. 7,000 call. I looked at it, my spreadsheet wrong. There we go. Not a problem. Just fixing it. Again, next month, we'll do a call again. 7 again. But this one is 65. Net position. Oops, why didn't it go? Hang on. 65. Net position is -1 because I shorted. I'm going to add in another leg. Now I can do the puts. And it was same July put. Oops. Strike price on the put, 55.5. Got to select it. And the 55.5 I actually did in -1 because I sold that. And then finally, last put. This was the 50, and it was in +1. Now I click add to preview, and that's my Iron Condor save in margin, and it's working. It's going to bring up my margin requirement. Look at this, initial margin and maintenance margin. So my initial margin to get into this position is $1,732.93. TradeStation uses the same span margin that's shown on the CME website. So this is actually what you should have to use. You'll know that, or note that there's a, let's see, it should be initial margin. I don't know what the total is. I guess if it's, no, it shouldn't be both sides. It just should be the one side. And then the maintenance margin is right here. So if for some reason you had multiple windows open or you accidentally hit the close, all you have to do is click on the box right here. For instance, I did a crude oil spread. If I want to see what the margin was on that, I click on it, and there it was, $841 for that spread. And I can see what the trade exactly was. It was trading the December crude oil versus May of 2026 crude oil. But again, we're dealing with options today. So again, I go back to my options. You can see the margin. Oh, actually, though, it is 24.52. That's the actual margin. The total margin for both legs is there. That's what it is. So it was 2,400. It wasn't the 1,700. And you can see more details. Again, if you go to the report and view the report, more information on the trade itself. There's the different legs. But yeah, the actual margin that showed as the total margin initial is the actual initial margin you would have to have. And the maintenance margin, the total maintenance margin. That's how you find the margins for the options. Now, if you're buying an option, typically you're just going to be paying the premium, so you don't need to go through all this, but you could. It should match up, obviously, based on what you pay. But typically, when you're selling options, the risk is typically going to be the margin required, but there may be an addition based on volatility and risk. And that's what span margin's all about. I'm not going to go into too much more detail on that. But basically, with that Iron Condor to speak of, put that in a little while ago, and actually I'm not looking at the contract here. So let's do that. This was for CL Iron Condor, July. So let's bring up the chart here. And I mentioned you can also do analysis, not just here, but on TradeStation. So if I go to my TradeStation and bring up the Option Station Pro, you can use a lot of the tools there to help you out with an analysis. It's cool. So again, I've got crude oil up right now. Let's see. I guess I don't. CLN25. There we go. And we're sitting inside of that range. Remember, I sold, was it 65 and 55? So we're still within the range. I figured we would be because we've been stuck in this channel for quite a while. And if we take a look, first of all, on Futures Plus, now that's come up, I can go into those options again. And the nice thing is also on Futures Plus, it actually shows you the names and the symbols. So these are the week 1, week 2, Friday, basically the weekend or weeklies. This is the LON 25 that I'm actually trading right there. I can recreate that entire position. Now, I cannot do trade. You got to be careful because if you don't switch this click to, it won't work. Right here it says, oh, trading is not supported on futures options for TradeStation. You got to use Futures Plus. But if I want to continue with using TradeStation desktop, I click to analyze trade. And we can create that position. Like I said, it was the LON, should be the right one. Yeah, it was June 16th expiration. I was just looking at the numbers, it looked a little odd there. It is, something's wrong on this. It's not loading up the options properly because normally I'd be able to see. Remember, I sold 65 call. So I click on the 65 and that's weird because it goes 58. And maybe if I buy and change it, buy should be the 70. There we go. 70 call. And then we also had sold. I'll change the numbers. I'm just going to put them in for now. I'm holding down the control key to add extra legs. There we go. And on the put side, I sold the 55 and bought the 50s. So I can build the whole thing right here. It's actually 55.5. There it is. Now, how much did I pay for this spread? Well, if I go back to my Futures Plus platform and my open positions, it actually tells me. So this is what it is currently. I'm down about $120 on my P&L currently because, again, I'm waiting for this to expire inside the area to collect the premium. But how much premium did I collect? Right here, this shows my average opening price. So I sold for 2.5. I bought for 0.26. I sold for 0.570 and I bought for 1.40. I already did the math here. And that's the average P&L. Sorry, the average opening price was right here. I didn't do that, did I? We can real quick. Again, this should be a credit. This would be a debit. So I'm going to make that negative 0.26. Is that right? The short put cost that much? I sold for that. That's right. And the long, negative 1.04. I'm just making it easy for me. So now what I can do is equals the sum of C3 to C7. So I collected $1.78. Now remember, this is crude oil. So $1.78 is worth $1,780. You got to multiply by the point values. And if you're not familiar with the point values, TradeStation actually will show you the point values for futures. If you go to the chart of that security, I think it's under the chart. Yep. You go to data and is it edit symbol? It is under properties, under edit symbol, right there, big point value. So if you're not familiar with the future and you want to know what the point value is, you simply go to data on your chart and then edit symbol. Under edit symbol, it's right here, data, edit symbol, under properties, there's your point value. And you need to know that point value for the options as well, because the quotes that you receive, for instance, on TradeStation Futures Plus, when we're looking at a quote on this, you have to multiply that quote by the point value to see exactly how much that option actually costs. In this case, again, I've collected $1,780 to enter that position. How much was my margin? We saw that the margin for that position, again, if I go to my report, was what? Oh, it's 24.52.93. So right here, I'm going to be getting, what was that? 1780 that I collected, 24.50, whoops, 52.93. That's a rate of return of 72.5%. That's my rate of return on my margin and how much I'm collecting, $1,700. And of course, the nice thing is, again, if I go back to my OptionStation Pro, I can go ahead and basically my credit that I said was what, $1 and I forgot. Was it 78, not 184? So I bring this back down to 178. That's exactly what my price was for that. And now I go to analyze. And is this about right? 70, 65, 55, 50, 50. Oh, good, John. I'm glad you got that taken care of. Awesome. So basically you can see, let me zoom. There we go. Zooming out, zooming in. There's my iron condor ignore the blue. That's the current right now, but that is the iron condor at expiration. And what I said was that I think it's a broken wing condor because of the pricing. It's not the same distance between each of these legs, but that's okay. That's just what I decided to do. But they're almost the same. And you can see now I can actually play around with this and get an idea of my Greeks, my break-even prices, all the good stuff. So I can do a little bit more in-depth analysis using my TradeStation on the options. If you're familiar with this tools like price slices and going in and looking at different dates by adding in on the graph, expiration plus however many days I want, I can add in. Oh, did the same day, didn't I? There we go. So that's expiration. That's halfway to expiration. This is today. There we go. So again, I can do my normal analysis as I would with options. If you're familiar with OptionStation Pro on the options on futures, you just got to put those in. You just can't trade it. You got to make sure that when you take a look at the options chain, you do click to analyze trade, and you can build the spreads as you would normally and do your analysis as you would normally as well. So I like using the OptionStation Pro because I'm more familiar with it for a lot of the tools, especially the price slices, versus using the Futures Plus, which is where you can put in the executions, the trades themselves. There it is. And there's definitely some good tools here as well, but I do favor the charting and some of the tools a little bit more on the desktop platform, so I can combine the power of both of those together. Either way, this is still a winning position as of right now because we are still within the options strike prices that I sold, 65 and 55.5. We're getting closer, obviously, to 65, but we're not there yet, so I'm not too worried about that position. Now, unfortunately, I am not in the live version right now. In the live version, I could actually set up the stop losses for the Iron Condor. Right now, I'm a little bit limited in simulated mode because they do not allow you to use the strategy tool, unfortunately. But when I go and put in, let's say, click on buy or sell, you can see right here, I have order types. I can do brackets and more complex types of orders. And if I wanted to do, again, the custom, let me see. There we go. Here is the strategy creation tool, as I said, and I can go to a template. And I think this is how I created it originally. There's Condor, but we want the iron. So I go to Iron Condor, and now I see, okay, sell by sell. Nope, that's not the right one. I want to do the reverse of that. That's the credit spread. So again, it's buy, sell, buy. And all I had to do was create the spread by clicking on the little magnifying glass and filling in the individual legs. So I bought, was it the 70 call? Oops, went too far. There it is, 70 call. I sold option L O. Nope, just L. Nope, take that back. Actually, I think I just hit C for crude oil. No, on this one I did do L for LO. I forgot you actually have to do the option specific. There it is. And I don't have to go search the individual one that I want. I can just click on any of these, select it for now, and change the pieces here. It's a little bit easier if you do that. So again, I did 65 call, and that's the sell. Then I did the other side, option, again, L, O. Just click one and change it. This was the 55.50 put. Finally, option L, O, put 55. Now, if I were in the live mode, I would be able to create that as a bracket order to be able to go ahead and exit. As it is right now, I'm in simulated mode, so all I can actually do is watch. And I can add to my watch list, which is right there, LO. And you can see that the bid ask right now is about 0.04, 0.05. It's kind of jumping around a little bit, but that's because it's after hours for the crude oil. But even still, remember, I sold that for what, $1.78, and it's now down to 91 cents or so if I try to buy it back. So it's definitely profitable because time value has decayed. So that's a little bit about how you can play, or what we did with the previous trade and some of the other things. Now, one of the things I did for today is I was looking forward and trying to find some opportunities in the markets. And there's a lot of different ways of doing that. I've got some screeners that I've put in together, and you can create your own watch lists, obviously, if you've ever done that before. In the TradeStation, you can create, I have a radar screen populated with different futures, current contracts. But what I've done also in the past is I created a watch list with the continuous contracts, and then I created a scan. And again, it's just one of the tools here under apps. Oops. scanner, and you can create scans for what it is you're looking for and run the scan. I don't have one in here right now, do I? Oh, I had scans. Oh, I reset. I forgot. I have a new computer. I reset everything. Anyway, I could run scans and find some opportunities in futures. And instead of going in and trading the futures contract itself, I can actually take advantage of the options because the margins are going to be much lower. I also do something a little bit different. I mentioned that the type of trading that I do is sometimes a little more advanced. And I don't just do, let me show you. If I again go back to the futures education session for TradeStation, you'll scroll down again. And in the master's class or master class, I mentioned before, right here, you've got the lessons coming up. This one we already did, the key concepts on options on futures. So answering some of those basics questions that you had, figuring out the question, leverage and how capital works, chain navigation, all that good stuff. We're going to talk about different strategies coming up in the next session. So you can register for that. And then, of course, risk management for it as well. But I also do some advanced futures trading, and that's also explained right here in futures spreads. One of the big things that comes in with trading futures spreads, it's not actually options, it's something different. So I don't want to get into it right now, but you're trading one contract versus another, and they're based a lot on something called seasonality. Basically, everything that you trade in futures markets, even the stocks, they become seasonal. Now, it doesn't mean January, everything's going into a dive, and in March, they start going up. It's seasonality based on the actual commodity, typically, or we've heard of the saying for stocks, perhaps sell in May and go away. Well, that's referring to the nature of the Nasdaq for the most part to drift a bit sideways throughout June, July, August, the summer months, and then things start picking up again after Labor Day. So the Christmas rally, Santa Claus rally, that's another seasonal move that typically happens in the markets based on Christmas sales. So there's a lot of things like that in the markets. And you have to subscribe, unfortunately. Whoops. I don't want to show you the current one. I'll go to previous trades here because that's not fair. But right here on MRCI, there's other services out there. It doesn't matter if you want to subscribe to or not, but I can go out to seasonal trades and even there's some other additional information. And I can find opportunities. For instance, there was buy June 20 Dow Jones on approximately the 7th to the 29th. Now, I don't blindly jump into these, okay? And that's silly to blindly jump into them and just trade them as is because the win rate is not 100%. Even if it was, which some of them get pretty high. As a matter of fact, I use another service. Oh, never mind. I got a picture of it. Yeah. Let's see. Where is that? I forgot I opened up my whole thing. Here it is. On the Nasdaq, seasonally, there is a seasonal rally right here from roughly June 2nd to July 31st. Now, it's not guaranteed. You can see in the last 5 years, though, there was a nice little rally right there. And I mentioned there's some other tools that I use from time to help me out with this. Actually, I probably want to go there right now to chart it out and show you. I'm not going to spend too much time on this subject because, again, it's not really the focus of this. It's more about the option trade that I'm doing on it. But NQZ 25, there we go. And long exiting on 31st. Forgot to put that in. There we go. And you can see that for the past 5 years, that's the red line. It's been pretty good. Actually, a little bit better than the last 15 or 10 years. The 10 is in green. The last 15 average is in the blue. So seasonally, this is a rally that actually usually gets going pretty good right around the 27th. Still, in the last 5 years, as I said before, look at what it's done. Just in the last 5. That's the overall pattern of the NASDAQ for the last 5 years. Perhaps we adjust this to get out July 10th. There we go. It looks pretty good on paper right there. Let's back test this. Go to analyze. There we go. In the last 5 years, actually, it's only been an 80% winner with an average profit of $16,000. The average loss is pretty bad. The stop loss required to reach the average has been about $2,800. Now, if you don't want to risk $2,800 and you also don't want to have to come in with the margin required for the NASDAQ futures overnight, there's another way of doing this, which is what I have done. I decided to go in to the NASDAQ options. And again, it's a bullish strategy that I'm looking to take. So I went to the December options because, again, it's for the December contract that I found. And actually, what I should have shown you because I made that adjustment. But if I hadn't made that adjustment on the dates, I think it was the 2nd to the 31st, if I'm not mistaken. Analyze, backtest. Last 5 years for those specific dates, 100% winners. Now, again, doesn't guarantee that you're going to get a winner. Also, in order to make that average profit of about 17,000, you had to have about a $5,000 stop loss. Okay, so is that really worth it? It is 3-1, but who wants to lose $4,900? I don't want to risk that much. So what I did instead was create two positions. And I didn't necessarily need to create two positions. I could have created one, but I wanted to compare the two with you. So that way, the next time we get together, we'll be able to monitor this just as we've been doing with the Iron Condor on crude. Taking a look now, unfortunately, I don't have a volume indicator here on TradeStation Futures Plus for the crude oil futures, but I do have the Chaikin volatility indicator. And it's showing me right now that volatility is relatively low. No duh. You take a look. Oh, sorry, that's crude oil. Let's go look at the Nasdaq, which I also had, also low. The reason why volatility is low is we've been going up and somewhat sideways for the past month or so, right? Ever since we got a little more settled in the markets with the tariff stuff going on, we've been going a little bit flat in volatility. I could also, again, go back to TradeStation desktop and bring up the NASDAQ NQZ25. There we go. Now, I don't think I'm going to have the right volatility indicators again, because if I try to go implied volatility all options, I don't believe it'll have it because it doesn't carry that data. So let's see if it does or not. Yeah, it's not available. That's what I thought. But I can take a look at things that would give me an idea of what kind of volatility we might have. There's plenty of things that'll tell me volatility. I could look at Bollinger Bands as a simple thing. I'm going to go to Bollinger Bands. And I can look for other things that might help. But Bollinger Bands give you an idea of how much volatility you have. We actually, according to the bands, have average volatility right now. And I say that, let me get rid of this projection for now, and I'll disable these moving averages for now because I'm not using them. But take a look at the height or the width of the bands. They're not really wide. They're also not very narrow, right? Narrow bands means low volatility. Wide bands is very big volatility. So we're in the middle right here, which means that I could either do a debit or a credit spread. And if you go to some of the other options replay workshops that we've been doing, especially I think the last one we did, if I'm not mistaken, let me check real quick. I don't want to give you bad information. If I go back to, let's see, that's futures options replay. If I go to the other options replay under options education, so much education here available for you guys. It's pretty awesome. There we go. Options replay, watch previous. That was under the options education center. And there we go. Credit or debit, how to choose the right bullish vertical spreads. That was April 7th. And it pretty much goes into what I was just talking about, trying to figure out, okay, should we do the bullish or bearish? And I think there was another one I did. I don't know, I'd have to look back, but there we go. Too many things open, sorry. Right here, I chose, come on, not lock. What's going on here? There we go. I chose to do a bullish strategy, as I mentioned, because I expect the prices to go up. Why? Seasonally, for the past 5 years, it has gone up between June 2nd through the 31st of July. So what are the two choices I had? Well, right here, I had a position already open, but I did the December contracts. You'll notice I have a bull put spread, which is a credit spread, and a bear call spread, bull call spread, which is a debit spread. And yes, I also did a worksheet on that. Real easy to create. So what was the bull call spread? That was the debit spread. I basically had a long call and a short call to offset. And this is just showing the points, but I'm not sure if that was actually it might have been. I did market orders to get in, and that probably was my downfall there because I overpaid, I think. Shouldn't have been a debit that high at $43,000, to be honest with you. Let me see. Again, call. Yeah, it shows 1488. But again, when I got into that, we can look at it again right now. The problem with the simulated mode is I did a market order rather than a limit order. So if I'm looking, yeah, it's still showing 1488 for the call price. Let me see. Buying one call. No, that's better. 1272 at 22,000. I'm not sure if it filled though. And then 23.5 sell. And actually, I'm going to write those down instead. So it was showing, I was adding an extra column. The bull call spread, again, this was actually 1272 to 1488. That's why, because I did the 1488 was the market order that gave me, unfortunately. But normally I would try to split this in real life. There's no way I'm going to pay full retail price. So we'll call it, I don't know, 1350 perhaps. And then the short call at the 2300, sorry, 23.5, 644, 651. That's actually a tight spread. I'm surprised this one is not nearly as tight right now, although we're almost closing for the day. But we'll call it, what did I end up having actually? 626. No, I should have been able to sell for more than that, especially now, but we'll call it 650. So if that's the case, that would be, oops, sorry, E13. There we go. And E14. So $35,000 for that spread. And it may not be as good actually to do the spread, or I might want to go with a smaller, lower strike. The reason why I chose the strike I did was looking at the chart itself. I was trying to figure out where were prices likely to go, and actually probably should have gone further out in time, to be honest. No, actually, December's fine. The reason why is I want to avoid that time decay. So I want to make sure I have enough time for prices to move up. And I'm only going to be holding on to this until late July anyway. So the December contract will have more than 30 days left till expiration. You want to make sure that when you're doing a debit strategy that you're trying to remove some of the risk involved, and some of the risk is time decay. Again, if I were just buying the option, I would have had to pay $1350 or $67,500 for one option. That's crazy. Instead, I reduced the debit by selling an option against the one I'm buying, so reduce my cost and the cost of entry. Again, if I were to look, I'm curious now. Oops, let's stay here. I go to that customer center, new portfolio, enter, NQ, bull call spread. I'm just curious what it shows for the margins for that. So we're looking at NQ. Oops, sorry, it's options. So again, I go to Nasdaq, and we got the E-mini Nasdaq options, NQ. Perfect. Period code December call, and it was 22,000 long. And then short, the same month, come on, call again, 23.5, -1. Add to preview, save and margin. And right now, what's it saying I have to come up with? Oops, forgot I didn't take the check mark off Iron Condor, so it doesn't give me the report. But now when I click on view reports, it's showing me the margin cost for that. Total initial margin, 57.95. Although it says risk initial margin, I would go with the higher one, $7,600. That seems about right. $7,600 shows value of long option, short option. So I'd have to come up with $7,600 to open that position. It's a lot cheaper than owning the future overnight, right? By the way, if you don't know what the cost of is for the futures, right here under TradeStation.com, futures margin rates are available there. And it's right around 30-something thousand, I believe. Did I pass NQ? No. Where are you? There it is. $34,000 overnight for a long. So $5,700, a lot cheaper. Okay. Anyway, that was putting in a bull call spread. And then the alternative, as you can see from my positions, oops, right here, is a bull put spread. In that case, I sold the 22,000 put and I bought the 2,100 or 21,000 put to cover the one that I sold. So again, looking for the margin requirement, go to the customer center, take off the check mark this time, enter, we'll call this NQ bull put spread. Again, just random number there, go to futures and options, continue. We are again doing NQ, but on the option, so make sure to click there first. NQ, it loads Nasdaq, perfect. We're doing the December puts this time, 22,000. You have to select it even though I typed it in. Net position, I am selling that one. Add the second contract, December, put 21,000. Nope, it's long. Add to preview, save and margin. And my margin requirement for that position is going to be initial margin, 12,590. So actually what I need to do is right here, I can save it. I mean, I'll save the portfolio anyway, but I have the margin here of 12,590.57. is my margin. I'm putting it in my worksheet just so I have it. And the margin for the other, if I close this out, you'll see it was right there, 579586. All right. And what we'll be able to do is see now, I did both because I wanted to compare the two. But typically, when I'm doing these trades, I'm going to want to take advantage of whatever's going to give me the best opportunity, the best return based on the conditions in the markets. And one of the things I looked at was the volatility. You can see volatility is relatively low, or actually it's mid for where it's been. I don't know. Let me see if I bring up the different contract here, because this one obviously doesn't have a lot of history. We'll go to the current contract, June, which is going to be rolling over soon anyway. And still, you see, there's the volatility right in the middle. We had spikes in volatility. If the volatility was way up here, I'd be favoring credit strategies because with high volatility, the premiums are typically going to be higher. And that would be my opportunity. If the volatility is low, I would have done the debit spread, the bull call spread. This would have been the bull put spread. But since I'm in the middle, let's see which one works out best. Take whichever one I like. And obviously, as I said before, the margins are going to be a little bit different. For the call spread, I actually had a margin of about $6,000. And the margin for the debit put spread is 12,500. So we'll see how that turns out in our next session when we get back together. But hopefully I give you a little insight as to how I find some opportunities, as well as placing those opportunities in the markets on the Futures Plus. Unfortunately, like I said, it'd be a little bit easier with the live contract being able to do the strategy all at once, but you got to deal with what you got. So when I'm doing a simulated mode, I have to leg into it. As you can see, I've got those legs already done, but normally I would just go ahead and put it together in one of the strategy tools like that with a template. So thank you guys for having me here. I appreciate it. I'm going to turn the floor back over to Hayes.
Thank
And thank
you,
you for your time.
Brandon. Thank you for always doing this interesting presentations. I just wanted to tell everyone that the events calendar is updated with current events. We are going to have Brandon again for, let's see, I'm on the events page right now. Next
16th?
presentation is going to be the 17th. Yes,
17th.
it's going to be lesson 4 on futures options. So we continue the same topic on options on futures. So make sure that you mark your calendars for that Tuesday, June 17th at 11 a.m. Eastern time. All right, everyone, thank you so much for joining us today. Have a wonderful afternoon, and I hope to see you in one of our future classes. Again, Brandon, have a great afternoon. Okay, see you everyone later. Bye-bye.